Should you elect for the S Corp? Most CPAs come in here and they say, oh, well, you should go get an S Corp. Because an S Corp, well, you can pay yourself a reasonable wage. See, that sounds fine and dandy. Okay, cool, I get a reasonable wage. I get to pay myself so I can buy fun stuff. The problem with that is that it comes at a large tax liability. You don't want a large tax liability. What do you want? You want to be able to spend the money on lots of different things. But you can't do that because the money is taxed, right? So you're losing 50% of your money anytime you need it. So if you want to go buy that new car, you got to pay 50% in taxes to go buy the new car. Sure, you could try to buy it under the practice, but then you have to try to explain it. It's a whole hot mess. We don't really want to do that. What I'd much rather do is drive the income into a trust that can legitimately go buy a car, right? No ifs, ands, or buts. Does it benefit the beneficiaries? Absolutely. That right there is how the rich do it. See, the mortgages, the cars, the insurance, all of those expenses, you can't justify that out of an LLC. You can't pay for your primary residence out of an LLC. You just can't. Right? I don't care what CPA tells you you can, they're wrong. You can't pay for your primary residence out of an LLC, but you can pay for it out of a spendthrift trust that lists your family as the beneficiaries, right? Think your kids. So when your kids are the beneficiaries, then listen, the IRS looks at this and go, okay, well, does that asset that you're spending money on benefit them? Absolutely. Does the roof benefit them? Does the car and the vehicle that you take to drive to get them to school? Absolutely. Does their ballet and karate practice, are those legitimate expenses? Absolutely. What about school, private school? What about college? Absolutely. You see, all of those expenses, even insurance, right? Insurance is one of the hardest to write off. And we can 100% deduct every penny of that from the trust. Why is that? Because it benefits the beneficiaries. You see how the chart of accounts is totally different. Under an LLC, very limited. You can only do so much because it's restricted by industry and by all of these other codes. But if you spend it out of the trust, if it benefits the beneficiaries, we have a lot more leeway. So all we're doing is we need to convert your business income to trust income so the trust can go and spend that money, right? And when it spends that money, we can defer the taxes on it. So that right there is the key. The rich, they don't drive the income to their personal bank account, which is the entire point of the S Corp, right? What they do is they drive the income into a trust, and the trust can then go and spend it. And it's not in their personal name, and it's not in their business name. So what they just did, asset protection-wise, is they don't own anything, but they control everything. If you guys want to own nothing, control everything, all you got to do is say, own nothing, control everything down in the comments. Look forward to it. Chat then.